Okay, well, we should go up to date because a week ago we had just finished today where the Dow had fallen like 1,000 points at one point and everything was like falling to pieces. And within 24 hours, it was clear that it was a complete nothing burger. And broadly speaking, this week has been a series of 5 bars all banging within the confines of that one day's activity. So we've been pretty much stuck in the middle of Friday's range. That is to say, Friday the 10th, I guess. So let's proceed with the ETFs, all 20 of them in alphabetical order. Here's the diamond, and this begins a story you're going to hear again and again, which is Monday, Tuesday, Wednesday, Thursday, Friday, all within this range here of this one day. So before it was, Monday red, Tuesday red, Wednesday red, Thursday red, Friday very red. And this week was just a mess. As in this data-free environment, we try to figure out what to do with ourselves. Of course, if you refer to Slope's own earnings calendar, this was the first big week of earnings, and it's the week that's just so boring. I could not care less what J.P. Morgan, Wells Fargo, Goldman Sachs, Progressive, Bank of America is just boring. The next 2 weeks is where all the fun is, and it always is. And I hope President Fat Ass doesn't chop away quarterly earnings and make it like half year or yearly. Because, then we'll all be just completely bored to tears because there's nothing moving the market now except for corporate earnings. And so next week we have things like Netflix and Tesla and IBM, a pretty nice offering of good stuff. And then they really crank things up with, Halloween week, which is going to be just the biggest of the big. Microsoft, Amazon, Apple, Intel, Google, all these 3 days are going to be like everything. It's going to be the whole, and then you just know the earnings season is coming to a pitiful close when the oil companies start coming out. So Thursday we'll kind of put a cap on it. Anyway, getting back to our previously scheduled program, the EM was a little bit vexing. It plunged here, recovered here, fell here. I actually shorted it on this day. Didn't work out. We jumped right to the other side. So I was out there like a shot on Wednesday morning, and it didn't do anything to maybe regret that decision afterwards. So that was a fail. FXI, China, is still nicely positioned. And late on Friday, I actually shorted this one with a stop right along there. The miners finally met their comeuppance for the moment. Fell about 7% on the day. It could be just another one of these in which it falls and then a couple of days later it's like it never happened. Or maybe this is the beginning of something bigger. The junior miners, same deal obviously, although they tend to be more volatile, so the drop was over 7.5%. Gold itself fell, having been at a record high on the same day. It had a rather large reversal and closed down $6.29 off on the ETF. IEF is just slowly but surely chugging along. Updated stops right there. A little bit below 97. The small caps managed to hold their drop for the day. And although we were at lifetime highs on Wednesday, we are back beneath the broken trend line. So that's pretty interesting too. It's interesting to see that. I'd never noticed this before. One of the features of our trend lines is they show the annual return about 100% at this rate from the Liberation Day bottom. Palladium really got hit hard, which I am delighted about because I want to get back in at a cheap price. How low might it go? Well, the dream scenario would be down here, down at 115.93. I would grit my teeth and maybe tiptoe in if it falls to this level, but this was a very swift ascent, so I'd be much more comfortable if we got really hammered all the way down to that second price gap. But this is a good start. We've got an island reversal pattern right there. The cubes went up about as much as the small caps went down. And I think a somewhat important level is the high we saw this week. And if we break above that, then this changes from messy to very messy. Silver was a lifetime high on Thursday, and it gave that up. And so we basically undid pretty much the gains for the week. I mean, on a weekly basis, well, you can see right there. I mean, it's basically, you know, we went up a little, but the open and the close were about the same. Just for fun, we'll do yearly. Oh, what a mess. No, didn't work. Anyway, back to dailies. SMH. Yeah, it didn't work because you weren't looking at a year's worth of data. That makes sense. The SMH, as with the cubes, I think that the high we saw here is kind of important. And if we stay below it, that's a little encouraging. See if we can break below the trend line, because this trend line still has not been broken. The spiders, we are well below the broken trend line. Same idea. Stay below the week's high would really help things. Fingers crossed. TLT, the bonds, they had a very good Thursday. Peeled away some of that on Friday, but generally speaking, again, let's try weekly. You can see that kind of step by step it bottomed out here back in May, and it's been pretty constructively trying to repair itself. As far as oil goes, change this back to a daily. Pretty much lower highs. You can see there's a high here, lower high, lower high, lower high. So it could bounce again, but the very, very broad pattern is down. But might be getting kind of overstretched there to the downside. XHB. This trade worked out nicely. I actually did a post about this on Wednesday, premium post. And that was, I think I did, it was either Tuesday or Wednesday. I was definitely noted the original stop to me is here. That was a good clean stop. I've tightened it up like so. But, you know, it should be could be a little more generous like that. But I'm keeping it tight. So that's looking good. XLB, the material select sector, managed to fall a little bit, I guess aided in part by precious metals weakness. XLE, energy, climbed about 0.75%, but as long as it stays below that price cap, that's fine. XME, that was a good one. I shorted that one on Thursday, a little nervously because Defined Metal's been such a horrible trade, but we've got a gap on this one now, so that's good. And the last one, XOP, oil and gas exploration, close up a little bit. I'm not in this one. It's got it's way too wide of a stop, and the chart's a mess, so no comment.